Hello, everyone. So we had another pretty down week in the market, and I just kind of want to go through my buys and the moves I'm making. I've been buying pretty aggressively through this entire downturn, and I recommend all of you do the same. And before we get into the buys, I just kind of want to get more into the mindset and just letting you know you should be acting with urgency right now. You should be buying great companies at these great valuations and continuing to just dollar cost average your positions. And that's the best thing you can do for your returns. Every time, I've said this multiple times in other videos, but every single time I've personally have gone through any of these downturns, which there are some in 2018, although I wasn't too heavily invested at that time. I was just getting into the market back then. In 2020, during that whole pandemic scare, there's actually positions we'll cover today that I was actually buying during then that I made great money on with not a lot of capital invested, just because the deals you can get during these downturns are great and they can really just amplify your portfolio and your returns and really take you to that next step of your investment cycle. And it's happened to me every time. 2022 is another great example. I picked up a lot of Meta whenever it was going through its downturn, and I know sometimes the metrics can look very scary. Some of the headlines with all the Iran war talk and then the tariffs as well. And then you start seeing some of the capex spend to some of these companies. And I know it can get a little worrisome in the short term, especially if some of the metrics actually do start going negative. But it always pays to have an optimistic view on the market. And you got to remember the market is forward looking. It's always been forward looking. So even if we were to go into a recession, there's a good chance that market's going to bottom during the peak of that recession or midway through the recession before we're on the other side. When the economy starts to recover, the market's already going to be moving. And so you do not want to miss that. And I know I'm not going to go over too many things that everyone's probably heard a couple of times, but just remember that your returns get hurt significantly if you just miss a few of the great days in the market or the best performing days. And a lot of those best performing days do happen during these bear cycles on the recovery. So just something to keep in mind and just something to think about. So don't get scared. Don't get discouraged. If honestly you're anything under 50, don't even think about it. Just keep collecting your money. Keep putting your money in week after week. If anything, I'd say buy heavier, which is what I've been doing. I've been being very aggressive in this downturn because I am not trying to miss out on it. I'm not trying to have it happen again where in previous crashes, I've still bought relatively heavy, I'd say. But every time I've looked back, I'm like, oh, I could have definitely gone heavier and I just didn't. And every time it's been a tremendous buying opportunity and I just hate myself for not hate myself, but I just wish I would have taken more of an advantage because I think of how much more in a better position I could be portfolio wise if I took more of an advantage of that. So with that in mind, let's go ahead and go through some of my buys. And speaking of that 2020 drawdown, this first move of the week actually was me selling 3 shares of this company ticker symbol ATI. I've mentioned it a couple of times. This company does a lot of the materials. It's a lot of the materials for aerospace and defense. Mainly, they do some energy production and they have some equipment or some of their raw material is used for MRI machines and stuff like that. But the vast majority of their business comes from their advanced alloy solution segment and the high performance material and components. Mainly nickel alloy, some titanium as well. They basically have a lot of the powdered compounds that these defense manufacturers will kind of 3D print to make the parts for more of these plane parts that are going to be at higher altitudes because they need higher quality material that's not going to deteriorate. And this material is particularly difficult to weld on. So it's better to just have kind of these parts 3D printed. That's why they get it down into this fine powder. It makes it easier. And this company has done me really well. And funny enough, coinciding with kind of the actual like rising war tensions and stuff, That has also a bit helped the stock price, just because, like I said, they do make a lot of their money from the defense side. So that's been good. And I normally try not to cut my winners short, which I haven't really done with this one. And that's why I haven't also just sold my entire position, which I'm going to throw it up on screen in a sec. But I'm just slowly starting to cut and cut just so I can transition into some other names, which we'll get into in a second. And it's not because I don't like this company. I still like the company. Great business. The management team's done a tremendous job giving us shareholder returns and just improving the company. They had a great turnaround. My average cost basis, which you'll see in a second, is actually down at $7.67. So very low. Stock prices at about like 140s, in the 140s right now. So well over almost a 2,000% gain. So it's even outperformed my shares of Palantir, which is crazy. So just kind of goes to show you don't always have to find that next game changer company. Sometimes if you just get the right company in a good downturn, your returns can be just as great as those big tech companies or those game changing companies like a Palantir. But anyways, enough rambling right there. So this week I sold off 3 shares of it. That was for $462, and we're going to get in a second what I rolled that money into. But again, I'm going to go ahead and flash up my position so far. Currently, I still have about $5,100 in it, 35 shares left. And with this position, if the market continues to downtrend and some of these names that I'm going to show you in a second continue to go down and down, I'll probably slowly keep selling off this position just to put more money into those other ones and kind of rotate more around and get my investment spread. But that goes with that first investment right there. So let's go ahead and move on to the next one, which we can start with Adobe. Adobe, simply speaking, just the valuation is very cheap on this one. I do not think AI is going to disrupt them meaningfully. And if anything, I think charging for the credits, for the actual AI credits, is going to be a net benefit to them. So I think at this valuation, I've just been picking up as much as I can. I've already built my position pretty large, so this week I only did a $100 buy, and I've kind of slowed down on my buying just because I don't want to get too overexposed, because it's already a pretty large percent of my portfolio. But simply speaking, just at this valuation, I don't think it can hold at this valuation forever. I know some people were worried about the CEO leaving, but in my personal opinion, I think that's fine. I mean, the guy's got to retire at some point. He's been with Adobe for, what was it, like 40 years, somewhere around that. Been CEO for over 20. I think he's earned a break, and I just think, like, that's fine. The dude's like in his 60s. He wants to retire. That's fine. And he's not even stepping down yet. They're finding a suitable candidate to replace him, which I think is fine. Giving everyone a heads up, hey, he's about to take off. We're going to look for a replacement. He's going to stay in line till that transition period happens. But just to give everyone heads up, I think that's fine. Rather than another stock, which that might be a video for another day. But yeah, with the PayPal CEO just randomly on the earnings call, like, hey, by the way, kicked out Alex Chris, and he is no longer the CEO, and wait till the day of earnings to tell us, which that as a shareholder, that was not fun to see, because something like that, I feel like, should not just be bomb dropped on an earnings call like that to just overshadow the entire thing. That should be something that's done well in advance. So I do not know what they were thinking. And you know what? Whatever. I guess while we're on it, just elephant in the room, my PayPal position, sometimes I get it wrong, and I think I got that one wrong, honestly. I don't even necessarily think it would have been like a long-term money loser if I held it. I think my cost basis was probably in the 70, no, it was in the 60s. It was like mid 60s. But at the end of the day, that rubbed me the wrong way, that they just so casually not only switched out the CEO, but just doing it on earnings like that with no prior warning about it and just going kind of dead silent really kind of annoyed me. And not to mention, like, the valuation was very dirt cheap, but I think I really was was just wrong on that one. I never really thought the company had a moat, but I didn't think it was like melting as fast, I guess you could say, as it really was. And I think part of it was I started using PayPal more, and I still kind of do a little bit because I like that it saves the cards, but at the same time, when you're competing against some of these other competitors like Apple Pay and Google Pay, that just make it so much easier, and then it's already on your phone, and it's usually cheaper too. I don't know, just really the main thing was just the CEO thing just rubbed me the wrong way, and I just wanted to cut ties with that. So I did just end up selling my entire position of that, just because even though I thought long term it was likely going to be higher than the price I paid for it, there was that opportunity cost where I was seeing some of these other opportunities like Adobe, like we're going to get into in a second on these other two, which I guess you're about to find out, SOFI and ZETA, where I looked at it and I really thought about it, and then I just kind of went, you know what? I think my money would be better suited on these companies. These companies have a wider moat, or they actually have a moat, I should say. I just think they execute better, and I feel like they're more aligned with the shareholders, and I don't see them pulling something like that. So just to get that out the way. But anyways, Adobe, $100 worth. I didn't want to get a full share because I wanted to spend more of this money over on some of these other items. And next, we can go ahead and cover ZETA. So this one, really interesting company. I feel like this one isn't talked a ton, but the company is very interesting. So this is an AI marketing company. And I guess just going through the buys real quick. So April 1st, I went ahead and I bought 12 shares at, let me pull this up. 12 shares at $15.85. April 2nd, I picked up another 3 shares for $46. And then again on April 2nd, I was like, you know what? I got to pick up more. Bought another 13 shares at $15.37. So with this one, just personally looking at the company, it's an AI marketing company. The company has a net revenue retention rate of, I believe in the last one, it was reported as 116%, give or take a couple of percent. I don't remember the exact one off the top of my head, but it was close to 120%. And to explain in simple terms what that basically means, this is the amount of revenue they're generating year on year for the same customers. So they're basically saying if the company were to acquire no new customers, just on the basis from raising prices on their current customers or giving new offerings, so their current customers are starting to get upcharged or maybe buy more items in their package or add things to their package to increase how much they're spending with the company, they would grow their revenue by 16% every year without acquiring new customers. Their organic revenue growth right now is sitting at about 20%. And they just had a Marigold acquisition, which is going to add some revenue growth right there as well. So not even factoring the Marigold acquisition, it's already organic revenue growth of around 20%. The forward PE on the company right now is sitting at like a 16.6. And the company reminds me a lot of Palantir back in 2022. It really does. So just to give a basic gist of what the company is doing, is if you think about marketing companies. So let's first take like first party marketing, or companies with first party data, I should say. Think of like Meta. They're able to really effectively do targeted ads towards different people on their sites because they have such a big user base. You know, what is it like with Meta, like 4 billion, close to 3.8, 4 billion, basically half the world on their app. Anyways, they have all of that. So they have all these data on these users. So they're able to effectively target marketing towards different people because they have all these information on people. So they're able to say, okay, this person will likely be interested in this product or service. Let's show it to him. When advertisers spend money on the platform, they're getting a higher return because they're getting higher conversion from those people. Now, if you think of a company that doesn't have access to that wide data source, so think of like a smaller, maybe something like a Target or yeah, Target's like a good example. Maybe even like a Nike or Bass and Pro, where they might have some data, but it's nowhere near to that scale, right? With ZETA, they have their ZETA marketing platform, and they have a lot of data. They actually have the largest third-party data set in the world. So the only people that have more data than them are those people with the first-party data, being like an Amazon, like a Meta, that have that huge user base. But in terms of the third-party data, they have the largest set. They have, last estimate I saw was about data on 550 million individuals. Out of those individuals, on average, about 5,000 attributes an individual. What does that basically mean? That's saying, so the example I've heard used a lot by the company is, say they're able to see a user and see, okay, this user has looked at maybe different reviews on different cars, or he's looked through different dealership websites over the past couple of weeks, and we see he's like visited a couple of times, so he's likely in the market for a vehicle. And so what they're able to do with this is, say you have a vehicle company that comes over here, let's say it's Ford or something, and Ford connects with the ZETA network. They end up working with ZETA. ZETA connects them to their network. Now Ford will start sending out the advertisements, but they're connected to that ZETA marketing platform. So the ZETA marketing platform knows that individual in their network. Okay, he's probably looking for a car. Let's put an ad in front of him. That will likely be something he will be interested in. That's a very basic example, but basically just trying to better make targeted ads and give you more access to that for multiple companies. And like I said, I just think the revenue retention rate kind of speaks for itself. Big reason this reminds me of Palantir from 2022 is actually their new AI integration product. So if you remember with Palantir, if you've kept up with that at all, one of the big turning points with Palantir was the inclusion of AIP. So originally, obviously they had Foundry, which is their main product. That was their main data analytics product. But they introduced in 2022, I believe it was 2022 when it was introduced, they introduced AIP, which was kind of like this AI integration with Foundry. So it made it very user-friendly. It was kind of like an LLM connected with the whole data analytics side. So you could kind of ask very specific questions, maybe like, okay, I need to find the best way to supply this product. How should I do this? And then it would analyze the data and give that to you in a very simple way that a lot more people could take advantage of. Same thing with ZETA. They just released their new product, which is Athena. And this is more on the marketing side. So if you've seen some of the, I think it was called the Athena Now, or I'm trying to remember. They have a video on their website where they kind of went through all in depth of what it can do. But I do remember one of them was basically saying, okay, I want to run, can you make me a sales marketing campaign for this product? And then we're going to try out these 3 different variations. Feed me which one is giving the best return. Something like that. Obviously, I'm very simplifying it right now just for video context, but basically, you can tell it this. It will set up this entire marketing campaign for you, send it out, bring you back the results that you're able to easily read, and you're able to go, okay, which one's giving me the best return? Boom, we're going to go with that one. And you're able to very easily analyze the data much quicker. And I do think this is going to eventually start making their business explode even more than it already is. Because like I said, it's already 20% organic. So that one, I'm pretty excited about this one. I'm continuing to just add week by week. If it continues to dip further, I will be adding more. Like I said, forward P's at 16. The PEG ratio is well under 1. Perfectly fine picking that up as much as I can. Now, next one and final stock I've been buying. This one's definitely more popular. More people know this one, but just SOFI. And this one's a more recent buy. My cost basis is 1640 currently. And this week I picked up, let's see the exact amount real quick. Let's see. This week I picked up, did I buy any on the 30th? Sorry, just checking. Okay. On the 31st, I bought 13 shares at 1540. On the 1st, I bought 17 more shares at 1594. And on the 2nd, I bought another 13 shares. So I mean, I feel like I don't really have to say much about this one. Most people know what SoFi is, obviously, banking company. But just as the weeks have gone by and I've read more and more, and just me personally, like having experience with the actual app, it's built my conviction more and more than I do think this is going to be a large banking player in the future. And even as somebody, I've always had the same bank account since I pretty much started working back in 2018. I was always with it's a credit union by my a local credit union where I live, and it's been fine or anything. But really, it was earlier last year I ended up opening a SoFi account just because I saw if you had direct deposit enabled, you got 3.3% on savings, and my credit union was paying literally nothing, like 0.5% was not even 0.5%. I think it was less than that, like maybe like 0.1%. It was something embarrassingly low. And I was like, okay, let me move a little bit. And then slowly a little bit turned into more and more. And then I was getting 3.3%. So it's like slowly it shifted to where like I have like 1,000 in my original savings, and pretty much all my savings is over at SoFi now. And even now, this was actually just like 2 or 3 days ago, I got an offer on SoFi where you could sign up for SoFi Plus and it'd bump up your savings rate from 3.3% to 4.5%. And I ran the numbers on it. I'm like, okay, I'll make more than what the subscription is costing me. Plus, I'm going to get that 20% discount off TurboTax, which I already used TurboTax anyways. Plus, I get some other benefits for different loans, which I'm looking to get a mortgage in a few months from now, which you get an additional $500 off with the $500 that's already doing it with SoFi already gives you. So that's $1,000 total. So I really just looked at the numbers on it. I'm like, okay, that's like a no-brainer. And that's really just kind of building my conviction, because I was somebody who really didn't switch banks a lot. I didn't want to go through the hassle, but even I am like, honestly, I'd probably just switch everything over to run in just my SoFi account if it wasn't for the fact that it's so tedious to transfer everything, because I've had that bank account since 2018 with my credit union. So all like my subscriptions and stuff are going off that card, and having to track down everything just to transfer over to this new one just seems like such a pain. Plus I got my business account through there as well. So it does make it a little simple to just transfer from my business to my personal account. So that's kind of the reason I slowed down on that, but at least my savings moved over there. And I know definitely if I'm looking for a mortgage, that's going to be one of the places I am looking at. The app's very friendly and easy to use, and I just think they have a pretty good model. So this one I'm just continuing to build as well. I'd like to build this position probably twice as large as I currently have it. I guess I'll let y'all know. So I have currently 193 shares at $16.40 a share. If I could, I'd probably want to at minimum double this position size, if not more. So I'd say at minimum I'd probably want to grow to 400 to 500 shares, if not more. But really it does depend on just the valuation staying around this area. I don't think I think my buying would probably slow if it was over like 22, 23. At these under 20 prices, I'm perfectly fine just loading up. But yeah, this company, great. And so those are my individual buys, but I also invest in my Roth IRA, and pretty much every single month I have $550 going to my Roth IRA as well. And so with my Roth IRA, with my buys there, this is just going off the top of my head because I'm not signed into my Fidelity right now, but I will definitely throw the screenshots on, so it might be a little off with my numbers right now. But I know I bought over $100 of Meta. It was probably like 150-ish, I want to say. Maybe 200 because I had some dividends that were hitting in that account, so it raised my amount of my buying power in there. And with Meta, it's already my largest position in my individual portfolio, funny enough. But I just think it's such a great valuation. I think it's an amazing long-term hold. I see the revenue accelerating. I know people are worried because the CapEx is going to hit earnings, but I really don't care. I think they're in growth mode. And in terms of businesses with an insane moat, I think they have probably, I want to say the strongest moat in the world, because when I think about it, I'm like, how do you disrupt that? How do you come and disrupt a company with half the world's population using their apps consistently? Their moat, their moat alone is just their user base. Their user base is ridiculous, and they always produce the best returns for advertisers on their platforms. If you're a business that needs to advertise your products, it's always their platforms first, and then you start looking at other platforms to start advertising more and spreading out. But they consistently bring the best returns. So for that reason, that's why I'm very comfortable holding that as a very high percentage of my net worth being tied up into that company. I have absolutely zero concerns about that. EPS can get hit, but I already know operating cash flow is going to be fine. I see the revenue accelerating. And also another thing noticed is, I don't know if y'all have noticed this as well, but if you look on Instagram currently, something they started doing recently is if anybody's selling anything on an ad and you open the comments, now when you swipe up, it's starting to like bring up the page to order, which I think is going to raise conversions. So they're likely going to either start charging more or start getting a percentage of that, which could be another driver of revenue that they can pull from. That's just a little thing I noticed that I just wanted to mention. But yeah, still consistently buying Meta. That's in my retirement portfolio, and I'm going to continue accumulating that for years to go in the future. Now for the other two, I just bought, I believe, $200 and $200 each of two index funds, just the QQQ and VU, which is the S&P 500 index. Not much to say there. I don't really complicate it with my retirement portfolio. I leave the actual individual investing and the let me actually build out my portfolio and everything. I leave that for my individual account. For my retirement account, I like to just keep it simple. So I mainly just keep it in those two index funds, and I just split between those two, even though they have some overlap. But I really don't care. Long term, the U.S. market's going to grow long term. If it doesn't grow, then we're going to have much bigger problems that isn't even that. Okay, the money is not even going to matter at that point if in 40 years from now, the U.S. economy hasn't grown. There's obviously much bigger problems, so I could care less. So those two index funds. And like I said, I started adding Meta. That was recently. I didn't always do that, but I believe it was probably back. It's when the stock started dropping, which was probably back in December, maybe January, I want to say. But somewhere around there. But either way, yeah, with that one, I just started finally adding that in. But really, my retirement, I try to keep it simple. So all in all, with everything there, that was close to about $2,000 of cash invested. A little under like $1,900 this week invested in my portfolio. Of course, about that 450-ish was actually just transferring out of ATI into those other positions. So really net about $1,500, give or take around there, of new money coming into the portfolio and just trying to buy more. And this is already coming on top of some past weeks where all this year I've already been consistently buying at a rate of $400 a week. But the past few weeks, it's been a lot more rapid. I'd say that it's been more like maybe $1,000 a week. One week it was like 2,000 or like 1,500, 1,800. So I've been buying very aggressively. Right now I'm pretty fortunate in the fact that I still have a really good cash position savings. Like I said, I'm looking to get a mortgage, so I am actually looking to get a house in a few months. So I'm still keeping that in mind, but even keeping that in mind, I do have more than enough to cover it. And I am doing fine. So what I'm doing, I'm going to continue to buying. I'll be buying next week, the week after that, and I will buy as heavy as I can while still having the money I need to support myself, obviously. But I just recommend all of you do the same. Do whatever you can to get more money to invest right now, because these opportunities don't come all the time. They're few and far between. It could be a couple years till we get another good downturn. So when it happens and you're able to get these great stocks at these great prices, take advantage, act with urgency, and don't wait for it to start recovering because you're leaving so many gains on the table. Know what you own, buy what you own, increase your ownership. Change your mindset to just asset acquisition. Don't think of it as buying a stock. You're going, okay, I want to acquire as much ownership of this company as I can. I want to be as big a piece of owner of this company as I can because I think the company's going to be much bigger in the future. Keep doing that and you're golden. But I just wanted to get this out, get through all my thoughts on this, get some of my thoughts out there, get some of my buys out there. And I know this was a more lengthy video. I haven't even checked the recording, how long I've been talking, but it feels like I've been talking for quite a bit. But you know what? I think that's fine. About 30 minutes, well. But you know what? I think that's fine. I like talking about these stocks. I enjoy talking about this, so it's going to be a longer video. So whoever actually stuck all the way to the end, say something in the comments and let me know, because I doubt a lot of people are going to make it this far. But if you are, you know what? Good to see you. And if you got any recommendations of something you want to talk on, or any of these stocks I bought, and I could give more in depth of why I'm buying them or my thought process on them, please let me know. I'd be happy to talk about it. I love talking about this stuff. It's just need an outlet to talk about some of these stocks, because not the most interesting thing to talk about it with random people. Not everyone is so into stocks, you know. But yeah, I'm going to go ahead and end it there, guys.